Amazing day, team. Today we closed the day up $81,000 and we are officially green for the month of August, which that first month on August 4th, we lost $171,000, was looking bleak, but we stuck to the system, we stuck to the plan, and now we are in the green. But more importantly, Tesla is up over 6.5% today. We bounced off of this point of control that we talked about as our major support at $320 to absolute perfection. And it is looking like there's a very, very good chance the price is going to break out to $400 in the next couple weeks. And on top of that, in this video, we are going to be going over the $25 million worth of unusual call options that came into Tesla today. The expiration date was 9/16/2025, $360 strike. $350 strike, and we will be going over all of that in this video. So sit back, grab a coffee, grab some water. This is going to be an action-packed deep dive video, and you do not want to miss this. Now, before we get into the technical analysis and talk about my position that I'm currently holding, I want to go over the options flow for Tesla today. Now, for those of you who are investors in Tesla or people who don't even consider yourself a trader, you should understand and learn how to read the options market and how to read these unusual options flows because they're extremely important. Essentially, because the options market is so much smaller than the stock market, it is very easy to find unusual buying patterns and follow institutions. Now, I'm going to show you what makes an unusual options flow. I'm going to show you how we were able to find this flow as well. But if you want to learn to do this on your own, we have a free course down in the description. All of our courses are free, but I recommend taking the options flow mastery course. Now, the first thing that I want you to do is take a look at the bottom left side of your screen. This is a tool called Black Box Stocks. I have no affiliation with them. I don't think you need to actually have this. I post all of the unusual flow on my X, and I also post it within my Discord community in real time. But knowing how to read this information when I post it is very important. You can see today that we had over $51 million worth of confirmed call options on Tesla. Now, the important aspect of what we just said is confirmed call options. 95% of these unusual options flows that you will see people post are completely worthless. And the reason for that is we cannot confirm if that is actually somebody buying a call option or somebody selling a call option. The way that we can confirm it is when we look at the details of the flow. Now, a flow is basically just a cadence of orders. Institutions will try to hide their movements, and instead of taking one $50 million order or one $40 million order, they will buy a ton of small orders that comprise one massive position. Now, there are three things that we look for when we go over and find an unusual options flow. That is size, time, and urgency. First is going to be the size. If you look at this order flow here, this is just today for the simple contract 9/12/2025, $350 expiration. This is all the orders confirmed just for that call option. You will notice that there is a lot of call activity. And this is a lot of money, right? For some people, $30-40 million, that's not a lot if we're trading shares. But in the options market, this is a lot of money. You can see the first order was for 3 million, another 3.5 million, another 3 million, 2 million, 5 million, 5 million, and it just continues throughout the day. So this has size on it. This is not $20,000, $30,000. This is a big position. So that meets our first criteria. The second piece of criteria that we want to see is urgency. The way that we can spot urgency is first by looking at the type. What we want to see is sweeps. If this is just a bunch of blocks, it does not mean as much. But when there are sweeps mainly accompanied by some blocks, this is very important because it means that they are filling all of their orders on one exchange. Now, the most important thing when it comes to urgency and confirming that these are actually people buying calls and not someone selling a covered call is this letter right here at the end of the details. This _A and _AA means that they are buying these call options at the ask or above the ask. This is very important because it means that they are overpaying to get into this position. Imagine that you are selling your house for $500,000 and a buyer comes in and they offer you $700,000. They're going to give you way more than you're asking. That is very unusual, and that is showing a ton of urgency. And that's basically what's happening here. Somebody who is buying $20, $30 million worth of calls is willing to overpay in order to get in right now. So that is urgency. And then the last thing is time. So when we look at the expiration date here, which is 9/12/2025, this doesn't expire next Friday. This expires basically within 3 to 4 weeks, which means they are expecting a massive move to happen on Tesla within the next week and a half to 2 weeks, which when we get to the technical analysis side lines up perfectly with this volume gap to $400. This is exactly what we want to see when it comes to unusual buying. Now, of course, this person can lose money. I have watched whales lose money time and time again, but this is normally right about 75 to 80% of the time. Now, if we actually open up this order flow, you're going to get a better understanding of truly how unusual this type of buying is. This chart on the left here is going to show us all of the history for this contract. This yellow line here is going to be the premium or the price of the contract. You can see that the price of the contract has just been going down, 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 down because Tesla has been sitting sideways, and theta decay is going to eat away at that position. Now, if you don't know what theta decay is or how to trade options, we have a free, once again, options course that instead of teaching you how to read these unusual options flows, actually teaches you about options, how to price them, what the Greeks do. It's extremely simple, and you'll learn everything that you need to know to trade options responsibly in less than 30 minutes. Now, as the price of these contracts are going down, you can see at the bottom here, it's a little bit harder to note that the small orange blocks are the volume. So that is the amount of shares that are traded within a given day. It's pretty small. It's about 1,000 shares per day. The blue box is open interest. This is how many shares are being held at the start of market open. I'm sorry, how many options are being held at the start of the market open, which is about 1,500. Well, the daily average volume you can see here is about 1,000. Today, it was 68,358 contracts. That is about 60 times the average daily trading volume, which is absolutely insane. Now, with that out of the way, let's go over and look at the technical setup for Tesla right now. Those of you who follow me, you know that our plan for the past couple of weeks has been to play this breakout on Tesla up to $400. We have had this massive squeeze here for the past couple of weeks. Price action has been compressing, and we know that this big area on the volume profile, this gray indicator here, has been an area of compression. Now, the thing you need to understand is that the longer that a stock compresses or sits sideways and squeezes, the bigger either the breakout is going to be or the bigger the breakdown is going to be. Now, we initially entered our call options a couple of weeks ago for Tesla. The calls that I'm currently holding are 116, 2026, $340 strike price. I'm holding 20 of them. I bought 15 of them. We can actually just go in here to our journal and search for just Tesla. We bought 15 of them here on Monday, August 11th. I went in with 15 for an average of $50.60. And our plan was that if price just broke out quickly, we would hold on to that call option. We'd do very well. But the plan from the beginning was to average down with 5 more call options if we came back to one very specific point, which was this support at $320. Now, this red line that you see here is called the point of control. This is very important because what the THT volume profile indicator is going to show, the one here on the right side of your screen, is volume, but it's not going to show how many shares were traded in a day. It's going to show where over the past 150 days is the most amount of volume. And the point of control, this red area, is the area of the most amount of volume. this is going to be the biggest support level and resistance level that we have. And so that's why when price was going to pull back, my plan was to average down. That's exactly what we did. And you can see that our average came in here 2 days ago, Wednesday, right when we were on that support level. So that brings us to where we are right now. And of course, I want to mention this as well. If you want to get access to the volume profile indicator that we just went over, it's completely free. That indicator and all of our indicators are free as well in the masterclass series down in the description. Now, we know that the thick area of volume on the volume profile is where price compresses, but there is a more important area on this volume profile, and that is going to be these thin levels that you can see here from 340 to 400. These areas are very important because you have to think of it kind of like a price vacuum. Once price can actually push through this resistance level, this move will happen very, very quickly. We were talking about this for the past couple of weeks, how this could happen within like 5 to 10 days. Not from now, but once we break through this resistance level. A good example of this would be if we just take our candle replay and we go back here to April. Now, for those of you who remember, we were trading Tesla in April and we were trading this breakout. If we go back to April, you'll see we made $58,000 on Tesla alone, $94,000 in May, and then in June, we ended up taking some losses. But that April to May breakout came because of this. We had point of control, major support level. We had a big brick of volume, major support level. We had smart money zone, major support level, which we also teach for free in our courses. And we had this thin area of volume on the volume profile from 260 up to 320. So the same exact idea happens here. We have buyers accumulating. We have a massive discount zone. If we break resistance, that price gap, that vacuum is going to fill. And if we let this play out, that is exactly what happened. Price literally filled that vacuum within 27 days, broke out 40% in a month before rejecting off of that price level once again. And then the same deal happens to the downside, right? Point of control will act as a major resistance. Vacuum to the downside will end up getting filled. Same exact situation happened right there, and so on. And so does this mean that this breakout has to happen? Of course not. But all of our indications are telling us that this breakout should happen. And the biggest piece here too is that we have institutions who agree with us and are buying calls that expire in just a couple of weeks. So I think there's a very, very good chance that this breakout to 400 is going to happen very, very quickly. Now, the last thing that I want to leave you with here is that you need to be using proper risk management. It doesn't matter if you have an A+ setup. A+ setups can fail all of the time. You can see that just trading Tesla alone, my win rate is only 63%. But our average win to loss ratio is 2.3, which means that when I'm losing half, basically a little less than half of when I'm winning. And even more importantly, I want you to understand that the call options that I have right now are worth about $110,000. Well, in the past 2.5 to 3 years, we've made over $1.7 million trading Tesla. So even if I were to lose the entirety of this position, it's not going to hurt me. And to give you guys a little bit look on the inside of what my community members trade with me and see, you'll notice that even all of the positions I'm currently holding, they're only about 2.7 to maybe 3% of my holdings for each trade. Tesla is always about one of 30, sometimes 50 stocks that I am trading. Because personally, I don't care about the fundamentals. I don't care about the news. I don't care about the stock itself. I care about if my indicators and if my system is telling me to get in. And if my system is telling me to get in Tesla or any other stock, that's exactly what I'm going to do. I hope this video helped. As always, guys, from the bottom of my heart, really means the world to me to have your support. If you want to learn our system, get all of our indicators completely for free, the 12-step masterclass series is down in the description. And I hope you have a great weekend.